Monday, we are starting a new week, new trading week, and we are looking for the new opportunities, especially on the foreign exchange market. That is why I want to talk with David Jones from capital.com. Hello, David.
Hello.
David, I want to start from today's construction PMI in United Kingdom. PMI was at 55.3 points. Forecast was 46 points. How do you feel today's data for Great Britain pound?
It has been well received. As you say, it beat expectations. We've seen a bit of strength for the pound, for cable, early trading. And this does seem to be the theme in recent weeks. You know, we saw it with the non-farm payrolls in the US on Thursday, that markets have got quite a pessimistic expectation. And these numbers keep coming in slightly, well, actually quite a bit better than expected. So at the moment, this does seem to be helping investors and traders optimism when it comes to riskier assets like stock markets and the pound, all of that sort of thing. So I think it has been well received by traders this morning. I think the only concern is, do the numbers end up getting much worse then in sort of August, September, October? Is this just a short-term spike? But so far, it's been well received by markets, and we are seeing some pound strength at the beginning of the week.
Since last week, pound had gained against the dollar. Do you see more bullish opportunities on cable?
I think we could well see further strength, maybe back up to 128 in the short to medium term. I think it's trading just above 125 at the moment to the US dollar. And I think there are a couple of things here. We are seeing investors have an appetite for riskier assets. And I think, we've seen US dollar weakness in recent weeks as, the US dollar did very well during the pandemic as investors saw it as a safe haven. And as economies seem so far to be recovering quite well, we're seeing the US dollar under pressure and things like the pound and the euro a bit stronger. So I do think that perhaps we could see more pound strength as the week goes on. Of course, as we talked about last week, we still have Brexit here in the UK to worry about, but perhaps that doesn't become a concern until we get into the third or fourth quarter of the year.
Looking at the Australian economy, tomorrow we will have central bank meeting. Do you think that the central bankers can surprise the market participants looking, for example, at the decision?
Mm-hmm. I think central banks at the moment, after taking all the drastic action they took in March and April, when the coronavirus was really affecting the world economy and we saw lockdowns, I think central banks are just waiting to see what happens next. I think we've seen it from the US and the UK, the European Central Bank. I'm expecting the Australian Central Bank to be the same. So no change. But I think they are continuing to urge the Australian government to do whatever they can to help businesses affected by the economy. So I don't think we're going to see a change in policy from the Australian Central Bank, but perhaps caution about the medium term for the Australian economy and continuing to urge the government to do their part.
So one thing is caution, and the second thing is looking at the Australian dollar chart. Do you think that they can attack the resistance on 0.7030?
It's a really dramatic chart, the Australian dollar. And I think if anyone's watching this and you've never looked at the Australian dollar against the US dollar, have a look at it over the last few months, because it's massive volatility, big swings, as we saw the panic, first of all, then we've seen the bounce back by the Australian dollar. It's been trading fairly quietly, I think, the last couple of weeks or so. But you're right, that level, that resistance level, around 75, I think if we can crack that, then we could see further gains for the Aussie dollar. I think in the short term, it looks like it's struggling, but I think it's always at times like this that markets can surprise. So I think it's really the level to watch. It wouldn't surprise me if we saw the US dollar under continued pressure. And at the start of this week, we are seeing a stronger start for stock markets again in the overnight market in Asian trade. So perhaps we'll have investors continuing to embrace risk this week, which could help lift the Australian dollar through that resistance level. But it's been a really interesting and volatile market over the last few months.
Last trading day of this week will be the day of Canadian employment change. And looking at the data, looking at the forecast says there will be over 500,000 of new jobs in Canada. You think it is possible? And what is your view about the Canadian economy, or just the Canadian dollar?
I think it's really interesting that the Canadian economy and those job numbers, if we link back to the Friday payrolls, the expectation was for 2.9 million jobs to be created, and we had, I think, 4.8 million created in the end. So I think that number of 500,000, don't be surprised if it gets beaten, because I think economists have been probably rightly pessimistic and cautious. And so far, at least, the jobs bounce back is happening quicker than expected. So I think we could well see that number beaten. I think where we will get a surprise and volatility is if Canadian jobs are less than expected. I think that's the potential shock here. But for now, let's not be surprised if it gets beaten. The Canadian economy is an interesting one, of course, because a lot of it is oil. Oil plays a major part in the Canadian economy. We've seen the massive volatility again, negative oil in April, all of this, but oil has bounced back strongly. So I think the Canadian economy is perhaps more tightly tied to oil than other markets, and we may see perhaps that economy takes a while to get going. But again, it wouldn't surprise me if we saw a bit more strength for the Canadian dollar against the US dollar from here. So I think you're right, it's going to be a really interesting number to watch on Friday, that Canadian job report.
So this is an interesting number, and also interesting will be the crude oil inventories.
Yeah, it will be. And they're coming out on Wednesday of this week, of course. Crude oil has had this incredible bounce back. If we look at the cash price of crude in April, discounting that negative move for the May contract, the cash price was $10 a barrel. It's recently traded at $41 a barrel, so a massive bounce back for crude. But the last couple of weeks, it is sort of sideways up here. So I do think in the short to medium term, I think that the upside surprises for crude have possibly gone. So perhaps now the risk is of more of a sell-off for crude oil. So I think if those inventories end up being more than expected, so more oil in stock than was expected, we could see perhaps an exaggerated move downwards on crude. So it's gone a little bit quiet the last couple of weeks, but we could have some volatility if we have stronger than expected inventories on Wednesday. But it's another really interesting market to watch at the moment because it's so tied to the global economy.
So we are looking forward to new interesting trading week. David, thank you very much for your time. Thank you for your commentary. David Jones was my guest and yours, the Chief Market Strategist from Capital.com.
Thank you very much.